Hello and welcome to an episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. BTC on the monthly time frame. We are 3 days away from the monthly close. It looks like it's going to be a very strong monthly close. The only other somewhat relevant level is up at 58k, which is the all-time range high. That's the range high on the weekly, on the monthly, across all time frames. That could potentially be interesting, especially if we accelerate into it. Absent that, there isn't a lot to say on the monthly. This is really my only focus, up at 58.7. I could potentially become interested in 43 to 47 if we get a higher time frame pullback. At that stage, especially if it starts from the range high or a bit above it, it would align with the sort of 20-30% historical pullback that tends to make for good monthly entries. So I think that would be a very welcome sign, because at that stage we have 43, 47 support instead of having to look all the way down to 35, 37 on the monthly. So really focus for this week and next month on the monthly time frame, at least 58 and 60 plus, because you should expect wicks as far as any resistance, if there is going to be some. If we get a pullback, 43, 47. I quite like this decision tree. Essentially, if we get a monthly pullback, then we have a level that's somewhat closer to us at 43, 47. If we don't, and we just kind of break out, spike, fuck around, but this ultimately resolves in a breakout, that's just good for crypto in general. And the ETFs don't show any signs of slowing down at the moment either. So all of that is positive. The weekly time frame, also similar to the monthly, it's just kind of breaking out. You'll recall on Monday Markets, the main focus during the time of this consolidation was that we've had fake outs on both sides. Whichever way the weekly closes, you should probably assume it's going to go that way. Even if that sort of triggered late, that's already up, 12% from a quite late monthly close. If you're taking Don's breakout argument at 44, 45, wherever that was, that's an even better entry. So nothing bearish on the weekly yet either. The only other level that I had for short-term trading was 51.7, as you'll recall, this weekly highest close, and that actually ended up acting as a useful launch pad for this weekly open drive. If you're short-term trading, the only way that this weekly could start to look a bit dangerous, well, not even dangerous, just pullbacky in this area, would be that if we were to erase all of the gains made from this weekly open drive and these the amount of buying we saw on Monday, and end up losing this 52k area and closing below it, then we could say, okay, we had a lot of buying on Monday, all of that suddenly got retraced, and now we're back below the weekly level. Then you could make, I think, short-term pullback / bearish arguments, but that would be very much out of character for how most of these breakouts have gone. Most of them just send and don't really look back, especially on the weekly time frame. So I guess this can serve as a useful mental move up your invalidation if you're so inclined, or if you're trend following particularly aggressively, but nothing particularly dangerous on the weekly time frame at the moment. The only other weekly level is the range high, similar to the monthly at 57, 58, 60, whatever. That's essentially around all-time high price, so you can outline that area as a region, if you will, 58 to 60k, and then the all-time high itself will probably be useful. What else have I got to say? I'm not paying a lot of attention to the daily time frame. Nothing wrong with it. I just think the 4-hour does it better. I mentioned that retracing all of Monday's gains would be out of character. I think that's true if we look at how most of these breakouts have gone. Obviously, with the exception of some of the ETF price action, but even this bit of price action made sense because we're in a very well-defined consolidation. We had a fake out to the upside, fake out to the downside. This was ETF stuff, this was GBTC stuff, so some external catalysts, if you will, pushing the market out of the range. But otherwise, this has been a very clean uptrend from a breakout and no fake out point of view. So until proven otherwise, or until the market changes its behavior, I'm going to assume that is the case. And if it does change its behavior, then I will assume that something has changed and shift bias in the short to medium term. All of that to say, we had quite a long consolidation by recent standards from the 15th onwards, and we've now broken out from that consolidation. So the only way that this could turn bearish, or at least be short-term risk off, whatever language you want to use, the only way in which it could be different to what it has been would be to give back these gains that we saw start on the weekend and extend into today and end up closing back below 52k. I think at that point you could make some sort of argument that, hey, these past breakouts have not threatened the range that they broke out from, and this is quite different. We haven't had a proper failed breakout in ages, and I'm going to use this as an opportunity to be a bit more cautious, risk off, do whatever. Now, obviously, there is a world in which this just acts as a mega support and then moons through it, but honestly, I think you could make a sufficiently compelling argument for caution, because retracing all of these gains would just be so out of character for BTC. And then even if, let's say, the market comes down and you think, not really for me, and you get out, if it gets back above that former range high, you can just use that as your invalidation and tag your risk back on. So I think at least for short-term trend following or for mental stop purposes, just like we had 47k as our updated invalidation, sort of bullish until it gets back below there, I think you can make a similar argument for 52k, that bullish until it gets back below there. And it's just nice to be able to follow the market to whatever extent with invalidations that are reasonably close as opposed to very far away. So that's always convenient. And nothing else to say on the hourly. Whenever the market breaks out, the first question you might ask yourself, or you might get if you talk to your friends or if you're on Twitter or whatever, is where do I buy the pullback? Well, the answer is, in the context of a strong trend, the consolidation itself acts as a form of pullback. So the answer, somewhat unhelpfully, ends up being, well, you just had one. This was the pullback. If you wanted to get particularly granular with it and reach for conclusions, I would look towards this little consolidation we had before the most recent leg. If we look on the 15-minute, that makes for a decent cluster type structure between 52 and 53k essentially, but again, we're dealing with pretty shallow levels and on particularly low time frames. If that's your cup of tea, great. You could also add contextual levels to this thing, such as the daily open, the weekly open, previous day's high and low, to try to get something closer to the market, but immediately post breakout is generally where, unless you're well positioned for it, it's a bit trickier to catch a piece of it if you're so inclined. Did I want to say anything else? I don't think so. I think in terms of importance, I'm putting a lot of weight on the market not trading back below 52k, or at least getting accepted back below 52k. That would just be very strange and out of character. Oh yes, I remember. The other thing I wanted to say is a lot of the time BTC post breakout hasn't given the pullback to the level itself, which is obvious. What you don't want to see in the short term, in general, with any breakout, is for the market to break out and then straight away come back to where it came from. If the breakout is strong, it should move away from the point of breakout pretty quickly and put some space between price and the breakout level itself. What BTC has tended to do instead is, after the breakout, while you're waiting for the obvious quote-unquote pullback level, it sort of carves out its own range, its own consolidation, and then that breaks out. So while you were waiting for the whatever breakout level came before it, the market kind of gives you a new range to work with. And when the market is moving very quickly, when the market is trending, I think you need to give much more weight to recent price action. So that's what makes sense to me. At this point, 52k as a kind of mental updated invalidation. If you want to trade this thing, you'll have to do it either with very shallow pullbacks or in whatever new range it carves out, if it carves one out. Otherwise, if you're really dying to get a piece of this, as always with very fast moving trends, you'll just have to do your business on low time frames. And now the upside is you have levels to work with, you have some sort of structure, the probability of getting an entry is higher. The downside is these low time frames tend to be a bit noisier and trickier to navigate if you don't know what you're doing. You have to adjust your sizing and all sorts of stuff. But this has kind of been the theme of Technical Roundup, I feel like. Certainly Monday markets, also Casual Friday to an extent, that look, if the high time frames look good, you don't want to see a high time frame pullback. And the way you account for that is to trend follow on low time frames and keep in the back of your mind that at one point your low time frame trend following will be wrong. You'll lose that trade. And as long as you sort of manage your risk on that, it's okay, because you'll then get to trade a medium or high time frame pullback. Hopefully that framework makes sense. On the ETH front, ETH BTC was doing quite well, but then this morning, New York just mooned Bitcoin, and that's very hard to keep up with, which is what we're seeing in ETH BTC here. I still think that for ETH BTC, trading above the point of breakdown at this point would be helpful. You'll recall in the past, we put some weight on these former range low type of structures, but they got so choppy and had these pump retrace type of structures that putting a market structure barrier for this thing is probably going to be more helpful. And that comes out about 0.62, or if you want to be really conservative, 0.64 for a market structure shift. I still think those are good. They could potentially happen. I think it was looking quite good for a breakout on ETH BTC. It's just these ETF inflow type New York session spot buying rallies are very hard to keep up with. But if that kind of evens out and the market remembers what it was doing the day before, then that's looking more likely than before on the ETH front. But I think some very clear technical levels to work with on that front. On the ETH USD front, depending on your ETH BTC view, I was recording another version of this before I misspoke like 8 times in a row and restarted the recording. The argument here essentially was that we've had a very clear breakout from the 2500 resistance level, similar to BTC. It's one of those breakouts that closes significantly through the breakout level, and it's a bit paradoxical because your first thought might be, well, it's closed so far above, I can't buy it because support is so far away. However, if that weren't true and it were to close marginally above or not even above the level itself, then your argument would be, well, that's not a strong breakout, it's not a clean breakout, so I'm not going to buy it. So it's kind of a damned if you do, damned if you don't setup if you apply these unfair filters to breakouts. It's a bit counterintuitive, but what you want to see in general are strong breakouts from your big inflection points, and then you should assume that your entry is going to have to come from either lower time frames or just paying the premium for the breakout, and that's the cost of waiting for confirmation, right? There are always trade-offs in trading. There's no free lunch. So if you don't wait for confirmation, you potentially have lower probability but a better entry. If you do wait for confirmation, you have higher probability potentially, but at the cost of a worse entry. It's very difficult to have your cake and eat it in this case. So similar to the BTC breakout, similar to the an ETH in this case, you got your big breakout. It would actually it wouldn't be bullish if the breakout were weak, but getting a piece of it has to be done either systematically on a candle close basis or on a lower time frame basis, because that's just how it is. It's one of those, again, weird counterintuitive paradoxes that if it's a weak breakout, you complain that the breakout wasn't strong enough. If it's a strong breakout, you complain that it's too strong and that it's far away from the level. It's like, you can't have both. In general, I think the better approach and what's more in line with the market is a strong breakout is generally a better signal. So it's better to bite that bullet and either try to be early to it, or if you're late to it, just accept that pulling back to the breakout level more often than not, especially if it does it soon, is a bad sign, and you pay up for your entry and try to finagle what you can on lower time frames. Trading education, pseudo education out the way. There is an arguable ETH resistance level. I'm not hugely fond of it. It's this weekly cluster at 31 to 3300. I don't think it's particularly great. Obviously, if the market turns around, this level will look super genius and I'll look like an idiot. But it's not my favorite level. It's probably the only other structure, so for short-term trading it might be interesting, but for me, similar to the 5860 range high on BTC as being the level, and everything else is a bit meh in comparison unless the market really starts to pull back. For me, the better ETH level is 3900, and then you could argue there's like provisional resistance. There we go, we're making up terms on this show now. There's provisional resistance at 3500 or whatever. Again, in terms of ETH or BTC, I feel like ETH had a chance and it was doing quite well. It's just hard to keep up with this kind of BTC buying. If that evens out, then ETH might become attractive again, but that's something that'll have to be assessed kind of post ETF buying and liquidations, and something during the course of this week and potentially next week. On the ETH USD front, similar arguments apply as far as lower time frames go, rather. We had a breakout from 3K, nice round number breakout as well. I think if you're short term, either trailing stop, trend following, or just mentally updating your invalidations, if the market is strong, especially given it offered a low time frame retest here on the hourly at 3K, if the trend is strong, it should have no reason to trade back below 3K. It's kind of done its job. It was resistance for a while, it gave you a nice little flip, and now we're some way away from that level. So without getting too bogged down on the super low timeframes, I think the takeaway themes for this week are updated invalidations in the form of 3K ETH and 52K-ish BTC. I haven't paid a lot of attention to alts. I've been away, unfortunately. I'll try to catch up and do a catch-up show this week as well. to talk about some of these if you find them interesting. I wanted to talk about futures a little bit because you guys seem to enjoy that, and thank you. Leave a like, leave a comment if this kind of stuff resonates. If we look at BTC, the things that I pay most attention to, the quarterlies basis annualized, it's been creeping up, but so has the price. So while sort of in absolute terms or notionally 16-17% may seem on the high side, it's not too crazy given the corresponding price action. And oddly enough, you'll recall we had a bit of a bear tarded Monday markets when it ramped up to 20% for 22% for no reason. It still hasn't gone higher. The premium hasn't been greater than the 2nd of January. So this is some weird anomalous thing, but you could argue that at this point at a higher price, we are on a premium basis, as far as the quarterlies go at least, less leverage than we were in the beginning of January. So higher price on BTC, but less premium in the quarterly futures, and that's not a bad look in terms of leverage. Now, obviously, if this continues to expand and goes up to 17, 18, 20% plus, and the market just stalls, that would be a bad sign. That's essentially the signal to some extent that we got here. Oh, sorry, at the 20% spike. Where was that? Yes. No, I'm an idiot. I'm going to mess this up, aren't I? Hold on. Yes, here. So this is the signal that we got on this spike, which is that, hey, premiums have ramped up, but the market's done nothing. That's not a great sign. At the moment, yes, premiums are creeping higher, but so is the market. So as long as that is not divergent, it's fine. The market is willing to stomach an expensive cost to being long, which applies to quarterlies and the perps as well. It's only problematic if there's a divergence between price and premiums. And I wrote a whole tweet about that today. Go check that out if you haven't already. So yes, on the high side, but contextually not too scary yet, as long as this thing doesn't full retrace. It looks fine to me. On the ETH front, similar picture where this anomalous peak, we're not back up there, kind of moving higher with the price. It's not at a crazy pace either. It's more or less in line with the market. There's no outstanding divergence here. If that starts to diverge, either price just starts nuking, or the premium starts getting squashed, or premium starts to ramp as price does nothing, that could be problematic in the short to medium term. But even as we saw with the BTC example, all that gave was a 4-hour flush, and then it was straight back to the races. So this is by no means some macro scary looking reversal signal thing. It's just short-term ebb and flows, and just another way to look at funding, really. It's only when this stuff gets absurdly divergent and or to really absurd absolute values, that's when you can make more macro extrapolations. But at the moment, it's more or less in line with the market and not too scary, as long as price action doesn't become too scary. What else I want to talk about? That's futures. On the market front, I mean, altcoin funding is a bit higher than before. There's a nice APR heat map here that you can check out to kind of glance over and see where the market is at a whole in terms of the cost of being long. It's elevated-ish across the board. It's nothing absolutely insane, and it's always nice when BTC picks up the slack and sort of leads a lot of the large and even mid caps. I think, yeah, nothing too insane here. And also, I've noticed recently the market's been very sensitive to funding resets. So in the past, you would have needed a pretty large move to get a corresponding decrease in funding and to reset the premiums. More recently, the market can kind of flinch 3, 5, 8% on alts on a weekend or something, or even during the week. And that's kind of enough to get the most sort of culpable culprits on the leverage side to puke their positions and take these things back to baseline. So again, this is more short-term ebb and flow stuff, short to medium-term trading, nothing too scary from a macro or swing trading point of view. In terms of price changes, I mean, Uni had their fee switch announcement, so outlier there in terms of weekly returns out the large caps. Everything else, a bit of a mixed basket. You have Monero, Near, BNB, Filecoin, Matic, all that kind of stuff. Nothing thematic going on. I think if you're looking for thematic trades on altcoins, those are mostly happening in low and mid caps, and are also happening in the sort of private sale VC less liquid side. So I think there is thematic trading going on with AI, GameFi, and those types of proxy bets, but they haven't fully made their way to larger cap or liquid trading instruments at the moment. So the themes are there, just you're going to have to get your MetaMask out, get your Phantom wallet out to participate in those, or go for some whatever proxy bets are available, usually in lower and mid-cap stuff. So yeah, that's all I've got to say. Hopefully that was something. I would encourage you to read the tweet that I put out today about divergence. It's probably much more useful than listening to me ramble about this market. But nonetheless, apologies for my absence. We'll do some catching up content this week, hopefully. And also hope you had a wonderful week. And I will see you next week. And of course, as a final note, if you haven't checked out Woo, please do. And that rhymes, so I'm going to stop the video there. Bye-bye.